This is the Mooncast.
Yo, what up? Welcome to the Mooncast. It's where we cover everything from business investing to emerging technologies and crypto. So today we have Cosmos. They had an upgrade, right, to offer liquid staking, right? And this introduces a liquid staking module, eliminating a 21-day locking period applied for unstaked Atom tokens, right? And so the Cosmos Hub is a blockchain part of the Cosmos network and has upgraded a launch of liquid staking module, enables users to bypass the previous 21-day unbonding period by unstaking Atom funds, right? Atom is the native token of Cosmos network. Before the upgrade, Atom holders had a locking period of 21 days to move their funds after unstaking the token. With the new model, staked Atom can be used in Cosmos decentralized finance, right, ecosystem without compromising yields from staking, right? And so the liquid process involves users holding their tokens to validate transactions and secure a blockchain network, right? Participants receive rewards for their contributions, similar to earning interest on a savings account, right? And so here they have the announcement here where they talk about it, right, in more detail, where, you know, they say the V12 upgrade is successfully completed, right? Liquid staking module is live on Cosmos, and with the liquid staking module, the hub unlocks new dynamics within the Atom economic zone. Users can now directly liquid stake their already staked Atom without waiting for the unbonding period, right? And so, according to the pseudo-anonymous Cosmos validator CryptoCito, the new module will unlock over 400 million worth of Atom, likely accelerating the staked Atom presence in protocols running on Cosmos, right? The implementation of the liquid staking module means no more need to wait 21 days to unbond and no more choosing between staking or DeFi, CryptoCitos wrote, right, on X, right, formerly Twitter. The new version also allows holders to cancel unbonding already in place, allowing Atom to return to regular staking and can be used in the liquid staking model, right? And the upgrade went live at 1 p.m. UTC on September 12th at block height 16985500 under the name Gaia 12, right? Another expected impact will be seen in Atom's inflation rate. CryptoCitos explain. Right now, the bonded ratio for Atom is 67.8%. As long as it's above 66.67%, the inflation rate is slowly going down to a floor of 7%. Currently, it's at 14.26%. The higher the bonded ratio goes, the faster the inflation rate goes down, right? Additionally, Atom holders will be subject to a 25% cap on the total amount of Atom they can liquid stake. Furthermore, Cosmos Hub disclosed steps taken to mitigate liquid staking risk, right? So a lot of stuff here in this news, right? Let me try to break this down for you guys to simply understand it, right? Like I always try to do, right? So liquid staking, what does that mean? Well, that means that you get a derivative of the native token when you stake it on chain, so you can still play around with DeFi and decentralized applications and so on with the representation of the actual native token itself, right? So similarly, a good example could be back when we were at the gold standard, right? So when we were on the gold standard, you would put your gold in the bank and the bank would give you a digital receipt, or not a digital receipt, they would give you a receipt for that gold, which would be fiat dollars, right? And so those fiat dollars were a act or representation that you actually own the gold, but the bank was just custodying it. In the same instant, You're staking your Cosmos or your Atom on a validator, and as a reciprocating effect, they're giving you that receipt that you do own that Atom and you are staking it and providing and helping to support the network. And you can take that receipt and do things with it, right? And similarly with dollars, you could buy things and purchase things with dollars. Similarly, you can take that receipt and you can now participate in DeFi with a bearing asset, right? A liquid bearing asset, right? And that's what that Atom receipt is. So it would be L Atom probably, right? I haven't checked the Atom ecosystem in a few days, but I'm sure it's probably L Atom, liquid Atom, right? And you can take that liquid Atom, you can move it into a decentralized protocol. You could liquid farm. You could maybe if they have games there, you could buy NFTs potentially with it. You can maybe even swap it out for just regular Atom, if you wanted to too as well. So you can do different things with it. But remember, to unstake then your Atom, you would need that digital receipt back. You'd have to redeem that digital receipt back to then unstake the equivalent of the Atom that you have staked currently. But anyways, that liquid staking threshold is 25%, meaning that if you had 100 Atom, you could only stake 25 of those 100 Atom, or liquid stake those 25 of those 100 Atom, right? To be able to, take that representation, that liquid bearing asset, and leverage that for decentralized protocols and decentralized applications, right? And that's basically all that means. In regards to, he said something about the inflation rate is slowly going down to a floor of 7%, right? And he's saying that because he predicts that there's going to be more people wanting to then stake their Atom, and when there's more people staking their Atom, it brings the inflation rate down, right? And when there's less people staking Atom, it brings the inflation rate up to incentivize people to stake. Because when a protocol is, I would say, below the 70%, I would say 65%, 66, 67% is still okay. But you want to stay 70% and above, I think Aptos is like 84%. I think you can check stakingrewards.com. But the reason that you want to stay that high with that staking percentage for your entire protocol is because it's more secure, because someone could just buy up all the stake and now they kind of control the voting rights in that network, right? If there's less than 50% of people staking, it's very, very dangerous, right? So to incentivize people to protect the network, you just increase the emissions up to 15-20% is what Atom does. And it incentivizes more people to want to stake, and then it brings it back down. And then when there's more people staking and the emissions goes back down, what you're hoping for is the emissions going back down, people still stake, and there's asset appreciation because there's more people having locked liquidity, or in this case now liquid liquidity, but it's liquidity that's staked on the network instead of actually circulating like out and about for people to buy or for people to dump, right? And that's the entire idea behind it, right? And so, yeah, it's very, very interesting that Atom is doing this. It needs to provide some more utility for their network, because Atom is a little bit, I would say, lacking behind in regards to utility, but in regards to technology, they're far ahead than other protocols in regards to that. I would say that their SDK is superior to most protocols in that regard. And there's a lot of protocols that moved over to them from the Luna debacle that happened a few years ago where Luna crashed, right? And so Atom is definitely something to keep an eye out for. It's something that I hold in particular, right? And as I do have high hopes for them, as there was a lot of hype with them earlier in the bear market, but it seems like they've slowed down a bit in regards to development, which I'll get to later in regards to my comparison with Atom versus Cardano, because I think Cardano is starting to develop a lot more quicker now than what I was expecting. There's actually stuff that's rolling out, so I'm really surprised with what they're doing. But anyways, let's go ahead and jump into the next piece of news. So we have Mistin Labs. Sui enables liquid staking with network upgrade, right? So Sui unveils functionality that allows token holders to receive derivative tokens proportional to the value of their staked Sui tokens, right? So same exact thing as I just explained, right? So you receive, again, a derivative, a liquid staking or a liquid bearing or derivative or whatever you want to call it of the native token that you actually have staked. So then you can then use that liquid token to participate in DeFi applications. Sui is a layer 2 protocol on top of Ethereum, right? So very, very interesting. And so this is basically, so when you scroll down, so Missing Labs layer 1, I'm sorry, I thought it was a layer 2. I thought it was a layer 2 on top of Ethereum, but it's not. So it's a layer 1 blockchain. Oh no, Missing Labs layer 1 blockchain Sui network's latest network upgrade has added support for liquid staking of its native token. Okay, so it's a layer 1. Okay, I thought it was another one. I get confused sometimes because there's a lot of these layer 2s on Ethereum, and this is the Optimism, there's Arbitrum, and there's plenty others, too as well. So Polygon, and so on and so forth. Base, so I always get confused, but this is not a layer 2. So excuse me for that. This is a layer 1 smart contract blockchain, right? And so anyways, liquid staking is where stakers are given derivative tokens in proportion to the tokens they have staked. Basically exactly what I just explained. The derivative tokens typically reflect the value of the staked tokens, perhaps with a slight deviance, and allow stakers to access the value that would be otherwise locked, right? And the upgrade will enable developers to offer services allowing token holders to receive derivative tokens proportional to the value of their staked Sui tokens. The platform said in the statement, Sui developers will now be able to offer fully non-custodial liquid staking solutions, right? So it appears that a lot of these protocols are going towards this liquid staking model, which again brings me back to Cardano, because they don't have a liquid staking model, but it can be leveraged through their UTXO, right? Which again, I'm going to explain this in a later podcast, because actually I'm going to be taking a Haskell course on the weekends just to get more higher technical understanding and knowledge of Haskell and UTXO and all these different things. But basically, from my understanding, to sum it up, you can stake your Cardano and it can still remain in your wallet, right? Which, I've staked Cardano before. The actual tokens themselves remain in your wallet. And they do, I guess, some kind of digital snapshot to then reflect that you're actually staking, or they leverage, I guess, a smart contract digital snapshot, something like this, right? But anyways, they found a way to make it so that your tokens remain in your wallet and they don't actually get staked to the actual validator itself. And there's no slashing in the Cardano staking mechanism, right? And that's the important thing to take away. And so basically, because your tokens remain staked in your wallet, there's a way in which you can leverage the fact that you're getting rewards, block rewards, right, for staking your Cardano, and then also still leveraging your Cardano in your wallet to also then still do DeFi and provide liquidity for DEXs, right, and stuff like that. So you can then provide, let's say for instance, liquidity for a DEX and somehow still be able to still stake your Cardano simultaneously in some kind of weird, funky way, right? So I'll get more into the technicals once I get a better understanding of it when I go through this course, because I don't want to confuse you guys. But basically, there's a way that you can earn double or triple yield, with the Ouroboros staking mechanism on Cardano, right? And so, anyways, this article goes on to read, says, the blockchain and smart contract platform said, unlike other networks such as Lido, issuing the derivative and determining where stake tokens are delegated, Sui allows users to stake their original tokens with the validator of their choice. So Lido just kind of, it's an autonomous staking protocol for Ethereum, where you just basically delegate your Ethereum to Lido or Lido, however you want to pronounce it. And what they do is they decide then which validator your Ethereum gets delegated to, right? So you don't know if the validator is trusted or not. They could be a bad actor. You could get slashed. You don't really know because they're doing it for you, right? And also it's also the disadvantage is that you don't know which validator you want to support, because some of these validators are public, right? And so maybe you want to support a certain validator, but you really can't do it on Lido, right? And so Sui allows you again to stake their original tokens with the validator of your choice rather than relinquishing the responsibility to the liquid staking protocol, right? Lido. And so liquid staking has the benefit of promoting decentralization by offering greater utility for stakers and thus increasing the incentives to stake and secure blockchain networks, said Sui in its statement. However, constraining the staker's choice of validator has the opposite effect by concentrating power in one of a few validators on the network. Sui's liquid staking formulation avoids this pitfall, right? And yeah, so that's basically pretty much it for the liquid staking mechanism on Sui. But like I said, I think a lot of projects are gravitating towards this more Cardano model where your stake is more liquid and you can free up then the liquidity to then do more things with it. So it kind of like generates new liquidity, if you will, because you have then the liquidity that's already staked, and then you have an excess amount of liquidity that then you can use and leverage in DeFi and stuff like this. So it's pretty cool. But I think Cardano has the best staking mechanism out of all the layer 1 smart contract protocols. But anyways, let's move on to the next piece of news. Breaking, well, it's not really breaking because it's on August 2nd. But anyways, it says U.S. Justice Department is considering fraud charges against Binance. So it's just funny what they're doing, right? So again, they're trying to chase Binance out of the U.S., right? I've said this multiple times already in previous podcasts. You guys can just go look and just see times where I've talked about Binance. If you guys have time to look at all the different episodes I've done, this is going to be episode 30 in regards to the weekly episodes. And then we have 2 after hours. And now I'm starting to do more after hour specials. So you expect another 10 to 12 more after hours on top of the weekly episodes that we're doing now. Just talking more about cybersecurity and going to talk about a little bit different topics. That's why I don't want to put it on the weekly episodes so that the listeners I have don't get confused. Like, why is he, dropping so much different content from so many different angles? And I don't want to lose the audience. So I just decided to just drop some after hours in the week, too, as well. So expect the first after hours to come out this coming middle of the week, either Wednesday or Thursday, right? But anyways, U.S. Justice Department is considering fraud charges against Binance. Meanwhile, when we look at the next piece of news, 1.3 trillion Deutsche Bank to offer Bitcoin and crypto custody for institutions, right? So again, there are major institutions like BlackRock, Fidelity, WisdomTree, Deutsche Bank, Santander, all these different big major institutions are getting into crypto, but yet they're trying to drive out the current crypto companies, right? That were big and major, the market leaders. They're trying to drive them out, right? Binance has been having a lot of troubles and a lot of regulatory issues. It's not really their fault. It's just really just people not wanting to do business with them for whatever reason, right? Well, we know the reason, right? They want their guys to be in charge of this market, right? Guys that they trust, right? Guys that they know. And that's just the reality of the situation. So this article goes on to read, it says, as the digital asset space is expected to encompass trillions of dollars of assets, it's bound to be seen as one of the priorities for investors and corporations alike, said Deutsche Bank's global head of securities services, Paul Maley. Our focus is not just on cryptocurrencies, but supporting our clients in overall digital assets ecosystem, right? So this is, again, a report from NASDAQ, right? And the article goes on to read, it says the announcement also comes at a time when regulatory clarity around the industry is improving. Governments and financial regulators worldwide have been working to establish clear guidelines for use of trading of digital assets. And again, this is why the institutions are now getting in, because there's a little bit more regulatory clarity depending on where you are, right? The U.S. is a little bit messed up right now. Even when now with the announcement of XRP being security, now the SEC trying to combat that, right? Just trying to cling to the last little bit of power that they have, right? But yeah, so according to the report, Deutsche Bank is proceeding cautiously and in line with the spirit and the letter of the regulations governing this asset class. Maley went on to further explain that our product design and the nature of the custody for clients will make sure that there isn't the risk of contaminating the bank's other activities, right? So Bitcoin continues to gain momentum and recognition as a legitimate asset class, with the asset becoming a very attractive investment option for hedge funds, family offices, and other institutional investors. Deutsche Bank's decision to enter this market is seen as a strategic move to capture a share of this burgeoning market, right? So, yeah, again, this is from NASDAQ, guys. So, as you see, institutions are getting in, right? And this is, again, another theory that I had already. I don't know if I talked about it already in the podcast, but I did talk about it in my research group about, the ETFs. And also, there's a lot of things happening here, right? So one of them is the CBDCs are getting formulated, right? The normies are more than likely going to use the CBDC, but then when they realize that there's not a lot of freedom that comes with the CBDC, and there's a lot of tracking and no privacy at all, and they're pretty much trapped in this like system and this dystopia, they're going to start trying to get into crypto. Now, by that point in time, they would have already been way behind the curve, right? Because the people who already hold crypto or hold Bitcoin, whichever one succeeds, because I think crypto would also do well, but Bitcoin mainly, right? They're going to win. And if there's a central bank digital currency that's basically controlling all of the currency within the nation state, what is then the purpose of the regional banks, right? There is none. There's no purpose of the regional banks at all because fiat doesn't exist. So they need to find a new way or hedge their risk so they're still relevant. So if they offer crypto services, right, it could still make them relevant to an extent depending on the laws within that nation state, right? And so it's a way to keep them relevant. Also, this is just, again, hypothetical. Also, they can use the fact that people can then deploy crypto and then borrow against their crypto, right? And it's a way that you can not have to sell your crypto and you can borrow against it. So it's great for the client or the consumer. And it's also great for the bank because, again, they're able to generate yield, right? From this, right? Through charging interest, whatever that interest fee is. I guess it depends on a lot of different things, right? Your credit score, if you're an institution or not, your cash flow, XYZ, right? So this is basically what I predict is going to happen, and I think it makes more sense, especially also with the ETFs, to do that too as well. But I just think now Bitcoin is not the price that it needs to be for people to really start borrowing against their Bitcoin. I don't think you should really borrow against your Bitcoin until it hits high six figures or mid six figures. That's just me personally. I think you should just keep accumulating on dips and holding and waiting until it gets to a certain point where it's suitable and the loan to value rate, you can set it a bit higher where it stops dropping. Once we have a cycle where Bitcoin stops dropping 80-90%, and we have a cycle where it literally only drops to, let's say, at max 60% or 50%, we then can set the loan to value maybe at like a 40% or 30% borrow rate just to be a little bit more safe with a 10% cushion and have more extractable value from the bank to then leverage, in real life to pay for, goods and services, stuff that we want to do, or even buy more Bitcoin. That's what like Michael Saylor does. But yeah, anyways, we can move on to the next piece of news. So here we see Binance user base surges 150 million, right? Despite the U.S. regulatory lawsuits, right? So U.S. is still doing all this regulatory BS, and Binance is still winning, right? The user base is still soaring and growing. And it says here the crypto exchange's user base was 128 million in May, reflecting growth of 22 million users in just 3 months. Crazy. So crypto exchange Binance has surpassed 150 million registered users, according to co-founder CZ, despite facing an ongoing legal battle with the United States regulators. The milestone comes with Binance's re-entry in Japan and a license in Dubai earlier this week, right? And the article goes on to continue. It says in May, Binance's user base was 128 million, meaning that the crypto exchange has gained so we already read that. And so it says Binance CZ was sued by the Commodity Futures Trading Commission, or the CFTC, in March for allegedly operating an illegal exchange and a sham compliance program. Subsequently, in July, the Securities and Exchange Commission sued Binance. So CZ and Binance US for allegedly breaking U.S. securities laws. The U.S. Department of Justice is also reportedly considering fraud charges against Binance, but is worried it could cause a run on the exchange and hurt users, right? Which is complete BS. Binance has been around since I think 2017 or so, and they're around in multiple different areas around the world, and they even doxed their wallets to show people that they're not messing with customer funds. So all that is BS, right? And they're also the market leader in the space, right? They didn't just show up randomly like FTX, But anyways, elsewhere, France is also reportedly investigating Binance because of alleged money laundering, right? In recent weeks and months, Binance has also exited the Netherlands, deregistered entities in Cyprus, and the UK withdrawn its license application in Austria and was ordered to stop operating in Belgium. Damn, it's crazy. It's crazy. So basically, you see what's happening, right? All this is happening to Binance. Meanwhile, Deutsche Bank is getting in. Meanwhile, Netherlands is getting in. I think they launched the first European Bitcoin ETF, if I'm not mistaken, in Netherlands, right? So again, they want their guys to get in and become the market leaders and to supply the Bitcoin or the crypto for their people. They don't want Binance, who's kind of an outsider, and CZ. I think he's originally from Canada. I think he grew up in Canada, but he's originally Chinese. I'm not entirely sure. But anyways, he's definitely not European, and he's definitely not Western, right? As you can see from his name. And so they want their guys in control of the market, right? They don't want to give licenses to people that is from unfamiliar parts of the world or don't look like them, in my opinion, right? This is my opinion. But anyways, yet Binance market share keeps growing. It remains the world's largest crypto exchange with nearly 65% market share in spot trading volumes today, right? And this article is as of the 3rd of August, right? Which is a lot. When you look at this chart here, it showcases Binance, market share as opposed to the others. I don't know why Coinbase isn't on here. It's weird. Coinbase should be on here, but it's not. But it has Upbit and Huobi and Bybit. I don't know why they don't show Coinbase, because Coinbase has a high exchange volume too as well. But anyways, Zhao remains committed to keep building, right? Last month, he said Binance is doing a lot of preparation to ready its systems for higher crypto trading volumes over the next 6 to 18 months because they know the bull run's coming. So Zhao expects a volume surge based on historical patterns and events, including the upcoming Bitcoin halving next year. Binance did not immediately respond to the block's request for comment on the new user base milestone, right? So let's move on to the next piece of news. We see here Binance received 2 licenses to operate in El Salvador. So even though they're losing over in Europe, that you can just spread out to, more in Asia and more maybe in Africa and also in South America. And yeah, so they have this license and digital asset service provider, the company said on Tuesday. So this is really, really awesome, right? It's great news for Binance to be able to acquire this, especially what's going on in El Salvador. They're very forward thinking. They want to be one of the market leaders there, especially after the bull run and during the bull run. There's going to be an influx of people looking to get Bitcoin, right? And buy Bitcoin at a rapid pace, especially when prices are going up. People just tend to want to buy and pump prices even more, just kind of how it works during the bull run. So great situation for Binance overall. So in the next piece of news, we have Razal Khan's husband admits to being hacker in infamous 2016 Bitfinex attack, and CNBC reports. Ilya Lichtenstein was arrested alongside his wife Heather Morgan last year on money laundering charges tied to the proceeds from the exploit, right? And so New York resident Ilya Lichtenstein, husband Morgan, an entrepreneur. So Heather Morgan, an entrepreneur and rapper known as Razal Khan, revealed himself as the hacker who executed a multi-million-dollar exploit of crypto exchange Bitfinex in 2016 while pleading guilty to money laundering conspiracy charges at a hearing at the U.S. District Court in Washington on Thursday. Until now, the hacker's identity has remained one of the most elusive facts of the case, right? So the article goes on to read, says Bitfinex diligently worked with the U.S. Department of Justice to identify the perpetrators of the hack. recovering the stolen Bitcoin and bring the hackers to justice. An external spokesperson for Bitfinex told CoinDesk. Right after 7 years, those efforts have come to fruition. Liechtenstein 35 inspired to launder 119,754 Bitcoin, worth roughly $71 million as of the spot market value as of the time of this article on August 3rd, at the time of the hack in 2016. Alongside his wife, according to U.S. officials, Morgan pleaded guilty to charges of money laundering and conspiracy to defraud the U.S. CNBC reported, right? So I think this Bitfinex hack, this is before the time I got into crypto, but from my understanding, it was a really huge deal, and I think they're doing a Netflix special on it if they haven't already. So that's something definitely to keep in mind and keep your eyes out for. But it's a very interesting story. And I think the most interesting part is that he's also a rapper. Crazy, interesting as hell. But yeah, I'll keep in mind and just try to follow up on these news too as well. But anyways, move on to the next piece of news. So the MVP VI investment announcement, right? So the main takeaways, right? So Binance Labs has invested in 4 top performing projects from the most recent season of its most valuable builder program, right? So that's what the MVB is, right? So the 4 high performing projects in the program include AltLayer, Kilo X, Kinza, and Sleepless AI, building across DeFi infrastructure and Web3 gaming, right? The investments demonstrate Binance Labs' commitment to supporting the most capable and forward-thinking founders who are driving innovation and meaningful use cases to build the future of Web3 industry for further adoption, right? So Binance Labs, the venture capital and incubation arm of Binance, has announced its investment in 4 of the top performing projects from the 6th season of its MVB, or the Mobile Most Valuable Builder program, right? An accelerator program that focuses on growing the BNB chain ecosystem, right? The investments demonstrate Binance Labs' commitment to incubating and supporting high potential projects. Such projects are building the foundations for a sustainable ecosystem that allows scalability and more users to onboard onto the Web3 ecosystem, right? So what is this in layman's terms for people who may be new to investing and stuff like this? Let me break it down for you guys, right? So when a project or a layer 1 protocol gets big enough, they'll take part of their treasury or the liquidity that they have in their reserves, and they'll distribute that in the form of incentives or grants to incentivize people to then build, people meaning entrepreneurs with ideas, to build on top of their network to create a network effect, right? With valuable dApps, right? Decentralized applications, right? Because without dApps, it's kind of like web browsers, right? This is what you can think of as Binance. Binance is like Safari, for instance, right? What is Safari if there's no websites on Safari? Well, it's not useful because it doesn't create a network effect and there's no value there. It's just a cool piece of technology that you can look at. But until there's websites, in this case, dApps, sensitive applications built on top of the layer 1, it creates value, right, for that network because people use the network because of the dApps that are on the network, right? So the better your dApps that are better than other networks' dApps, the more extractable value that you have as a network as opposed to another network, right? And so these grants and these programs are incentivization models to entice developers and founders to build on the platform, right? And they get crowdfunded for it, and in return they build cool shit. And that's basically what that is, right? So anyways, this article goes on to read, it says, Yi He, co-founder of Binance and head of Binance Labs, commented at Binance Labs, our vision is to empower and back early stage founders who are committed to building long-term innovative projects, right? So through the MVB program, we identified 4 high-performing projects for investment across various sectors. We look forward to seeing these projects' continued growth and positive contribution to the wider Web3 ecosystem, right? Okay, so when you look here, you can see the 4 MVB projects selected for the investment, right? So you have alt layer. So these are notable projects maybe that you wanted to take a look at and look into, right? But it's alt layer, KiloX, Kinza, and Sleepless AI, right? And you see with alt layer, it's an open and decentralized protocol for developers to launch application tailored rollups, right? The protocol offers a no-code rollups as a service dashboard built atop its core network beacon layer that allows customized rollups with fraud ZK proofs at speed, which is cool. So, ZK rollups is basically a new technology that's been rolling out a lot in the crypto space. And I think it's going to become more and more important, to increase the speed and decrease the network congestion of the layer ones as we move forward. So this is kind of a ZK rollup as a service type of thing, which is cool. I think it's really, really dope. I don't know if people will need that currently. Right now, we're in the bear market, but trust me when I say in the bull market, which I think the volume is going to pick up even greater than it was last bull run. If you guys don't know, last bull run, it was insane in regards to network congestion in almost any network. You look at a lot of networks, it was really bad. Even the networks that said that they were fast, and even Solana, who prided itself and marketed itself on being fast, got congested, during the bull run. And that's how much volume and how quickly a network can get clogged up, which is why layer 2s are so needed, because they roll up the transactions into the layer 2, and then everyone transacts on layer 2 and then finalizes the transactions back at layer 1, right? And so that's a cool project. So KiloX is building the next generation of user-friendly perpetual DEX focused on risk management and capacity efficiency. Its platform offers lightning fast trades and an intuitive trading experience with a wide range of trading pairs, while offering liquidity providers risk neutral positions and LP friendly solutions, right? So it's another one of these DEXs, but it's perpetual. So yeah, it's another one of those perpetual DEXs that you can go check out. DEXs, anyways, for you guys who don't know, it's a decentralized exchange, right? SEX is a centralized exchange, right? So Kinza is a robust lending protocol built for a reliable DeFi ecosystem that focuses on security aims to create the best on-chain money market, right? So again, it's one of these lending protocols again, where you can borrow against crypto and do this type of things, and you can earn yield by deploying your stable coin, and then other people can borrow your stable coin, and then they got to pay you back with a certain percentage of interest. And anyways, it goes on to read, says the platform features real yield that employs a dynamic interest rate curve, right? Generating real revenue from interest for the protocol and lenders, along with customized collateral risk that help maximize capital efficiency on the protocol while insulating risk from volatile assets, right? I mean, I've heard a lot of these lending protocols say that, they minimize risk and stuff, and then they end up collapsing. So again, we'll see about that. But anyways, moving on, you have also Sleepless AI is an AI blockchain-based virtual companion game utilizing AI, GC, and LLMs to create rich story-based gameplay and organically evolving interactions with characters. The project is currently developing 3 games, with its first title, Him, a virtual boyfriend Otomi game that features unique SBT characters that are immutable on-chain. Interesting. Okay, we'll see how that develops. So anyways, season 6 of the 3-month MVP program concluded in June 2023 with a curriculum that was designed to address the evolving needs of Web3 founders. Founders in the program received one-on-one mentorship from Binance Labs investment team, along with fireside chats with Binance Labs portfolio founders and Binance co-founders Shangpeng Zhao, or CZ, right? And Yihe. This iteration received over 1,400 applications, with 53% of applicants based in North America and Europe, and 36% based in APAC, which I think is Asia Pacific something, right? Whatever. Anyways, the program's highly selected process admitted less than 1% the total applicant pool. A new season of the Binance incubation program is currently open for applications. The program is chain sector and stage agnostic, right? Through the incubation program, Binance Labs is making a request for startups in the following areas, right? So these are the areas that you need to be looking for if you want to get into this incubation program, right? To be able to get some fundraising for your project, right? Looking at infrastructure, right? So maximum extractable values, ZK proofs or zero knowledge proofs, layer 2 scaling, and modularity, right? And they're also looking at tools and middleware, right? So you're talking about wallets, on-chain data analytics, on-chain search engines, right? To make things easier for people to search a blockchain and query blockchain data, right? And then obviously DeFi applications, of course. DeFi is just always going to be a huge thing. You know, you're talking about perpetuals and derivatives, investing in structured products, liquid staking, RAWs, and lending and borrowing, of course. Application layers as well. So AI-powered dApps, right? And that's what they want to look into because the AI hype and fully on-chain Web3 games and high-quality Web3 studios and SocialFi is also a big one for them too as well. So you can apply before August 15th, 2023, which is okay. So it's already ended as the time of this recording, right? And so, yeah, that's you can look into the next incubation program after this one that just already passed. But that's just basically how the incubation program works. I hope you guys like this breakdown of that. Let's move on to the next thing. So we see China still Binance's biggest market with 90 billion in monthly volume despite crypto ban, right? So they're calling for this crypto ban, right? In many different parts of the world, you know, and also Binance is being denied licenses and being chased away out of these different countries, but they're still booming in different areas in the world. They're still going to win, right? You see, China is still Binance's biggest market, right? And yeah, you know, you see the crypto exchange has over 90 million worth of spot and futures trading volume from China in May. The Wall Street Journal reported, citing an internal platform at Binance named Mission Control. Most of that volume came from futures trading, right? Binance's total combined spot and Bitcoin trading volume was over 670 billion in May, according to the block's data dashboard. After China, Binance's biggest markets are South Korea, Turkey, and Vietnam. So it's not even the US anyway. So, or Europe, anywhere in Europe. So who cares? You know, who actually cares? You know. So yeah, it's super interesting article. But again, yeah, it's one of those things where Binance is still going to be the market leader, I think, for a very long time because of their ability to adapt, overcome. They're flexible. They already have the networks. They already have the different locations around the world, which they're already. So even if they lose 10 or 15 different countries, they're going to just expand into other countries, you know, like they just did in El Salvador. As you see, they showcased already that they're capable of doing that in an efficient and quick manner. And CZ is very strategic. You know, I don't think he plans on going anywhere. And I think he's ready for a fight with these institutions that are starting to come in and they want a piece of that pie. So let's move on to the next piece of news. So Tether is now the 11th largest Bitcoin holder in the world, right? So Tether has become one of the biggest holders in the world. It says the stablecoin issuer currently holds about 1.6 billion worth of digital asset, right? The stablecoin issuer Tether has become blah, blah, blah. And then it says here, while Tether hasn't officially disclosed its Bitcoin addresses, Tom Wan, a research analyst at 21.co, said he discovered an address that potentially belongs to Tether that currently holds about 55,022 Bitcoin worth around $1.6 billion, right? So a source with direct knowledge of the matter confirmed to the block that Tether is the 11th largest Bitcoin holder. The rankings are also maintained on Dune Analytics by 21.co. Tether declined to comment, right? So it's not for sure, right? Because Tether declined to comment, which says the value of holdings matches with the total Bitcoin mentioned in Tether's second quarter reserves report published earlier this week. So, okay, so then it's obvious, right? If the the value of the holdings, it matches with the total, right? So that Tether actually holds in their reportings. So the company first revealed its Bitcoin holdings in the first quarter of this year, when it said it will invest up to 15% of its profits in Bitcoin on a regular basis as it shifts its reserves toward crypto away from US government debt. That is interesting, because remember, the main thing with Tether was that it was another thing that I was arguing was like, why is the US a little bit angry with this stablecoin stuff? Because anyways, they're buying US treasury bills, right? But if they're not going to buy the treasury bills or the treasury or the bonds, right? They're not going to buy the bonds, and they're going to move into crypto, then that's a less incentive for the US to want to keep Tether around, right? So they're probably going to come after Tether at some point, right? Because now that's the direct real threat against the US dollar, right? If they're gonna back their stable coin to Bitcoin more than they're backing it or using in buying the treasury bills, right? So it's very, very important to keep in mind with all of this, right? And to stay up to date on this, because it's very, very important news. And I think that there's a huge, I don't want to read the rest of this article, right? But anyways, I just want to say that I think that there's going to be a huge stablecoin war. I think I've already kind of talked about it once PYUSD, which is PayPal stablecoin, came out. There's going to be a huge stablecoin war that's going to happen with companies fighting to try to launch a stablecoin, with also the nation states launching their stablecoin, right, or their shitcoin, right, their CBDC. And we'll see where the chips fall. We'll see where they land. But it's a very lucrative market, right? Because people want stability. So it's very, 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 very gonna be a large demand, for stable coins, I think, over the course of time. Especially with the situation happening in many countries, experiencing hyperinflation, whereas in the West it's happening slower. So yeah, let's move on to the next piece of news. So we see Coinbase takes stake in Circle, launching USD on 6 new blockchains. So if you guys don't know, Coinbase owns USDC, and they're a direct competitor to Tether. And yeah, so they're just continuing to expand, right? So USD is launching in 6 new blockchains. This article goes on to read, says crypto exchange Coinbase said on Monday, at the time of this article, which is August 21st, it is increasing its support for stablecoins with an investment in Circle, right? The companies are also assigning full control of USDC's issuance and governance to Circle, while disbanding Century Consortium, the organization founded to manage the stablecoin. USDC is launching on 6 new blockchains, but the companies did not stipulate which. So they haven't said which new ones. I'm guessing one of them, it should be, I believe, I don't know if Cardano, is it USDT or USDC that's on Cardano? I can't remember. But anyways, they should be, if it is other chains, I'm trying to think which ones it would be, because I think all the major chains have USDC or USDT, or both. I think most of the chains do. Most of the top major chains have both. But anyways, Coinbase is committed to a long-term success of the stablecoin ecosystem in USDC. Specifically, they continued adding that both companies will continue to generate revenue from USDC reserves interest income, right? So again, they're getting the interest income. I'm guessing they're buying US Treasury bonds and also offering interest, or well, they tried to offer interest at least in their platform in the US. And I guess the SEC tried to shut that down. They said no, they couldn't do it. But anyways, it says earlier this month, Coinbase reported it generated 151 million in USDC stablecoin interest in income during the second quarter. That was down from 199 million in USDC interest in the previous quarter. Coinbase cited a 28% decrease in USDC market cap as a contributing factor. Coinbase took to Twitter to state that buying a stake in Circle and changing the governance of USDC should not impact the financial outlook given when the company reported its second quarter earnings, right? So again, this article goes on to talk about PayPal stablecoin too as well. And yeah, traditional payments giant PayPal also earlier this month announced it is launching a stablecoin with the help of Paxos. So it's already launched, right? So it's already out. Like I saw it on the app. So you can go and check that out. I think, again, I already previously talked about this in my theory and stuff in regards to these stablecoins. The main things that these payment mechanisms like the Cash Apps and the banks and the Coinbase, all these sort of payment type of mechanisms, that they all adopt similar of the top networks, because then it can serve as an interoperability solution, such as Bitcoin or Ethereum and stuff. So you can send actual PYUSD to your Ethereum wallet, and you can swap it into something else, and that's how you can. It's a form of onboarding, right, into the crypto space. So yeah. The next piece of news, you see Alchemist reports return of all stolen funds from Curve pools. So yeah, so the lending platform Alchemist has announced the return of all stolen funds from the Curve finance hacker. The attack took place on the 30th of July and resulted in 61 million in cryptocurrencies drained, including 13.6 million from Alchemist, AL, ETH, and ETH pools, right? Again, that's why I'm getting into cybersecurity, because a lot of these hacks and stuff is happening, not just in the Web3 space, but also in Web2 with systems and softwares and all these different things getting hacked. So I just really want to learn more about this cybersecurity space. Again, I'm dropping after hours this midweek as an introduction to what I'm learning and how I'm growing in this space. So yeah, when we look at the rest of this article, right, it goes on and talks about the return of the fund started after the hacker accepted a bug bounty offer. Curve, Metronome, and Alchemex jointly announced an initiative to recover stolen funds on August 3rd, offering 10% bounty to be of the seized funds as a reward, and urging those responsible for the exploit to return the remaining 90%, which would bring the bounty close to 7 million. That's really nice. That's a really nice amount of income that those, hackers got. They weren't even white hat hackers, but I mean, I guess they became so because the deal is so favorable. They don't get any legal situation happening to them, anything legally, and they get $7 million, which is good. So yeah, this is basically the Curve. I know Curve was a huge deal. This whole news was a huge deal, and I just didn't really pay attention to it because I was just too busy doing other things. But it was a really big deal during that time frame. I'm glad it got sorted out and the funds have been recovered. So that's the most important thing, right? So anyways, next piece of news, we have MakerDAO's Spark offers 8% yield on DAI, and it blocks VPN use on front end. So this is just funny to me because MakerDAO, it says they raised the savings rate from 3% to 8%, making it a top rate among major stablecoin issuers. Its lending platform Spark is restricting VPN access on its front end. It's not decentralized, guys. It's not decentralized. So just keep that in mind. Most of these protocols, almost all of them, are not decentralized. Completely decentralized, at least, right? They use and leverage blockchain technology, but they're not completely decentralized, right? And it's not open for everyone, right? So if you're restricting VPN access in the front end, that leads me to believe that you are, obviously you're a registered company, that you're scared of the regulatory implications of the product that you have currently. So anyways, the article goes on to read, it says MakerDAO increased the yield on DAI, the third largest stablecoin, right? And this article again is from the 7th of August, right? From 3% to 8%, positioning it as one of the highest rates currently provided by a major stablecoin issuer. In line with the recent yield changes on-chain data revealed a significant transaction from an individual wallet. A single crypto participant transferred 14.32 million DAI into MakerDAO, likely to benefit from the 8% yield. This savings yield is offered through MakerDAO's lending platform Spark. The change coincides with Spark's decision to restrict users from accessing the platform's front end via virtual private networks. This move is unusual in the DeFi sector. It is primarily designed to strictly geo-block users from specific geographies, including the United States. Of course, right? Users attempting to access Spark with VPN are warned. Accessing this website via VPN is not allowed. Spark's terms of service detail the platform's stance on VPN usage, underscoring a resolute opposition to VPNs for evading geographical restrictions, a measure that appears to specifically target US-based users, right? So this article goes on to read, it says, as software fork of Aave's version 3 lending protocol Spark, so it's just basically a fork. This is the thing with crypto, man. It's just forks of a fork of a fork of a fork. And this again goes back to my argument with content and content marketing, but I don't want to go off on a tangent right now. I just want to really finish this news, guys, and get back to work because I'm super busy, but just want to get these news out to you guys, right? So Spark integrates direct lending capabilities within the MakerDAO ecosystem. Spark sources DAI liquidity directly from Maker and provides DAI loans, accepting assets such as Ether, staked Ether, and DAI as collateral. Spark operates independently of the MakerDAO protocol, right? And here you see the total stablecoin supply, right? You see USDT has the majority of the stablecoin supply, followed by USDC. Then DAI has a smaller amount, then TUSD and BUSD, and then there's 13 others too as well. So yeah, that's it for these major news. And moving on to the next piece of news, we have bridge assets to Coinbase's layer 2 top $100 million as of August 6th, right? So Base has seen more than $111 million valued bridged over to layer 2. And as we know, layer 2 is something that you need to pay attention to, especially with Base, because even though they're not launching a token, I guarantee you there's going to be a flood of liquidity during the bull market that's going to use Base's layer 2, and probably going to have a really cool on-ramp to go directly to layer 2 so you can bypass the Ethereum layer 1 to bridge then to layer 2 and pay the gas fees. This is just my speculation, right? If it's not already out currently right now, right? And so, yeah. So again, this is another thing you need to keep in mind, you know. Yeah, I'm just looking at this article now and just scrolling by, just seeing what is pertinent information. So as per L2 Beat, $111 million in crypto assets have bridged over to Base. Coinbase, which announced its launch of its layer 2 to scale out the Ethereum blockchain in February, said on August 3rd that it would widen mainnet access next week in conjunction with the release of a bridge to Ethereum. I think every centralized exchange is basically doing, I mean, Coinbase is just following the blueprint from all the other centralized exchanges, right? All the centralized exchanges basically are launching a blockchain or already have a blockchain, right? Which, you know, I think Binance was the first one to do it, and then everyone just started following suit and doing that because you kind of have to have two, and it's also a great hedge as well. Because say for instance your web 2 company, you know, whatever happens, you know, something happens, at least maybe you can still play around in the web 3 space and, you know, build something of value in that arena, right? And also you can leverage the fact you can build decentralized applications and build actual network systems on your own layer 1, layer 2, whatever, right? Which creates a bigger network effect, right? And also drives a funnel back into your web 2 company, right? Your crypto exchange, right? So people can just basically use all of your products from web 2 and web 3 and go back and forth between them, right? And I think that's the added advantage of what Binance figured out. And I think Crypto.com and a lot of these other exchanges kind of followed suit. I do think at some point Kraken will make a blockchain, and they have a Kraken coin, but they don't have an actual chain. And Gate.io has a token too as well, or it's just a token. So yeah, I think this is very going to be a thing that you're going to see more and more of, this hybrid sort of centralized exchanges that also have sort of DeFi projects or, you know, Web3 projects and so on, right? Yeah, so that's pretty much it. So Base rollout is part of what Coinbase is describing as an on-chain summer, which we'll see a number of brands, including Coca-Cola and OpenSea, collaborate with the crypto exchange on-chain events, right? Interesting. That's very, very interesting. As reported by the block's Vishal Chawla, Base's developer-only mainnet went live on July 13th and was primarily accessible to developers. However, in the lead-up to the official launch, several users bridged access to the network using a portal proxy contract and other unofficial bridges to trade new meme coins that led to a surge in activity on the network, right? And there was the meme coins that were rugging like crazy I remember on Base. So keep in mind, just proceed with caution. Remember, none of this stuff is financial advice, guys. I'm just reporting the news. Proceed with caution because a lot of these projects will rug and you'll just lose your money and then you'll be mad and you'll blame everyone else but yourself. So keep that in mind. Moving on to the next piece of news. Again, to continue on, you see Uniswap gets deployed on Coinbase's layer 2 network base, right, as well. So their version 3 has been integrated into Coinbase's layer 2 network, right? And so within a couple of days, they saw more than 10,000 transactions, right? Which is insane, right? And Uniswap, the largest decentralized exchange on Ethereum by trading volume, has been integrated into Coinbase's base network, right? Enabling token swaps on layer 2 network, right? And since the integration went live, Uniswap specifically, the third iteration of its exchange on Base recorded more than 11,700 transactions and about 3,650,000 in trading volume, right? And so again, part of this on-chain summer. And yeah, we'll see more of the leading dexes, I think, from, you see now also PancakeSwap, which I'll get into, I think, next as well. Yeah, PancakeSwap deploys on Ethereum scaling network Arbitrum in expansion drive, right? So you see a lot of these dexes are starting to realize that they need to go interoperable and spread their risk to be able to extract more liquidity from all the different networks as opposed to just being basically only with one particular network, right? And that's the problem, that in the beginning the dexes were just, so PancakeSwap was only beholden to Binance and Uniswap was only beholden to Ethereum, but you're starting to see these networks, these dexes starting to realize the more that they expand to different networks, the more that they're able to extract more liquidity and the more they're able to survive, because dexes is all about liquidity. If you don't have liquidity, then no one's going to trade on your dex because they can't actually trade properly and move large amounts of liquidity. So you see PancakeSwap is also expanding. I think they've expanded to like 5 or 6 different chains, right? And yeah, so this article goes on to read. It says, like all dexes, PancakeSwap relies on smart contracts instead of a middleman to process blah, blah, blah. We know this already. It was already on the BNB. Here we go. It goes on the BNB chain, the Ethereum, Polygon, ZK EVM, ZK Sync, and Aptos blockchains, right? So you see PancakeSwap expanding out as well. The DEX held over 1.54 billion worth of tokens as of Wednesday, according to DeFi Llama at the time of this recording, which was in August 10th. And yeah, PancakeSwap's decision to launch on Arbitrum 1 reflects its commitment to driving mass adoption of DeFi. Chef Coco said, with the utmost scalability and cost effectiveness, PancakeSwap aims to attract a wider audience to exchange and facilitate broader participation in the DeFi ecosystem, right? So yeah, to the next piece of news, we have Cardano's blockchain transactions jump 49% in Q2 on network upgrades, new users, right? So blockchain load, a measure of how much data is contained in blockchains over a certain period, rose to 50% in the second quarter from 40% in the first. It peaked to 81% in May. Cardano transactions rose as several upgrades went live earlier this year, attracting both users and developers to the network. Such metrics usually precede an increase in token prices as they indicate growing demand and usage, right? So we see Cardano blockchain activity sparks, right, in the second quarter and grew in both value locked and transactional metrics from the first quarter, right, amid technical improvements and rise in developer interest, right? a report by the analytics firm Messari shows, right? And I think Messari is the one that's typically, hasn't had really good articles written about Cardano in the past. And yeah, they're just being a little bit more objective. And it's true. Cardano their developer rate is surging. I believe they have the highest developer activity, if I'm not mistaken, or one of they're like top 2, top 3 developer activities according to GitHub, right? And they're actually doing a lot. They have the Minthrow upgrade where they're able to suppress the chain, so you can basically take a snapshot of the chain, so you can leverage different things more quicker instead of downloading the entire blockchain. They've done a lot of things. There's a lot of improvements happening in Cardano. Project Catalyst is taking off too as well. And this article goes on to read. It says while decentralized exchange MinSwap showed the largest absolute growth, several new decentralized applications or dApps also contributed to the increase, Messari said. The report, which was commissioned by Cardano developer Input-Output, compared to second quarter developments against first quarter figures. It noted that while transactions activity grew, the number of active daily users decreased 4%, the fourth drop in address activity in the past 5 quarters. The ratio of transactions to active users has been growing steadily over the past 5 quarters, suggesting that the average user is more active now than they previously were, right? And so blockchain load and measured, blah, 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 blah. So we don't need to read that. It says DeFi Llama shows that 175 million worth of tokens are locked on Cardano as of Monday, the highest level of this year, but still 50% below a lifetime peak of 340 million hit in May of 2022, right? Which is still really good considering that we're in the bear market, right? So the article goes on to read, it says, a change to reduce epoch transitions and make the blockchain smoother for network users took effect in June, right? Epoch referred to the time periods in Cardano with epoch lasting 432,000 slots and each slot being 1 second. ADA tokens are staked during these epochs during which new blocks on the Cardano network are produced, potentially increasing demand for tokens as block rewards become more lucrative based on activity. In March, a feature on Milkomeda, a network that connects blockchains to the Ethereum virtual machine, began to allow Cardano blockchain users to gain access to EVM smart contracts with any Cardano wallet, expanding the ecosystem's usefulness. An Ethereum virtual machine is where all Ethereum accounts and smart contracts live, serving as a virtual computer used by developers to create dApps. The new feature will allow Ethereum application developers to build Cardano's network using Solidity. That's huge. The computer language used to code Ethereum without needing to install new toolkits or learn a new computer language, right? So this ties back into Marlowe, which is their dev stack I talked about in a recent podcast too as well, where now you can use the code that you're using is perfectly fine, and they have basically a translator that translates the code into Haskell, and then you can deploy your application and whatever you want to deploy on Cardano. So it makes it easier for users to build on Cardano, right? Super, super important. So they've done a lot of things to sort of streamline processes and make it easier for developers, right, who don't want to learn another coding language and stuff like this. So yeah, it's very, very interesting. So Milkomeda, I used it last year, right? And yeah, they're pretty good. I mean, I used their bridge. I just tested it out and bridged over some USDC, and yeah, very, very interesting project. And yeah, you can use Cardano wallets for it, so that's cool, like the Flint wallet, for instance. And yeah, so it's very, very cool. I like what Cardano's doing. They've done a lot of development in 2023, and I'm really, really happy and pleased with what they've been able to accomplish this year in particular. They were a couple years behind, but like I said, when Cardano says something, you need to add 2 years to when they say it's gonna come out. It typically takes a lot longer than when they say things are gonna drop. You need to be patient, and they do deliver on what they say. They just take longer, and they may not come at the time frame in which you're expecting it to come, right? And yeah, so just don't have any expectations when they say things, but just know that it will come out. It just may not be at the time frame that you want it to come out. But anyways, on to the next piece of news. We have Solana-based Cypher protocol experiences exploit, freezes smart contract. Again, not decentralized. This is my problem with Solana, right? So protocol contracts are now frozen as contributors attempt to make contact with the hackers to negotiate a return of funds, right? So again, probably gonna turn them into white hacker, right? Or white label hacker or whatever, white hacker, I think it's called. And so anyways, Solana-based decentralized protocol. Cypher lost close to $1 million in crypto Monday due to an exploit or security incident. The protocol's contracts are now frozen as contributors attempt to make contact with the hackers to negotiate a return of funds. Cypher is one of the fastest growing protocols on the Solana blockchain, in part because of its loyalty program, which rewards depositors and traders with points that many users expect is the setup for an airdrop. The exploit comes during the Cypher's biannual Hacker House MTN DAO, which it hosts in Salt Lake City alongside fellow Solana trading protocol MarginFly, right? In its Discord channel, MarginFly said it was not impacted by the hack. But yeah, again, Solana not decentralized, and you need to keep that in mind, that they can freeze the smart contracts, guys. So that tells you everything you need to know. It's unfortunate that people will potentially lose their money, so hopefully they can come with some kind of negotiation with the hacker. But anyways, let's move on to the final piece of news. Blockchain.com obtains major payment institution license in Singapore. Huge for them, right? So this license allows the exchange to provide regulated digital payment token services to its global institutional and accredited customers, the company said Monday, right? So this it continues to expand its presence in Asia, the company said on Monday, right? And it says blockchain.com said in a statement that the Monetary Authority of Singapore issued the company a major payment institution license on August 1st. The central bank previously granted the firm an in-principle approval for license in October, according to the blog, right? So Web3 support on Monday, it says a commitment of $150 million over 3 years under a fintech and innovation program that includes a track to support Web3 technology. So it says last month, Singapore's High Court said it considered cryptocurrency property in case involving crypto exchange Bybit and a contractor. The court ruled crypto assets are things in action and capable of being held in trust. Mass, right, says Mass also published a report in June collaboration with the Bank for International Settlements on a framework for tokenization and institution-grade DeFi protocols, right? So really sweet. Singapore is great because they're very crypto-friendly, and I think they're going to be super ahead of the curve, come these next 2, 3, 4 years. So it's good that there's companies that are launching there and securing their market share and their piece of the pie as the market continues to grow there too as well. So it's very, very interesting. So guys, this concludes the end of this podcast, guys. I hope you enjoyed this one, man. I'll see you guys in the next one, and peace.